What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, avabenesocky and augustbiniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, welcome back to the Real Estate Investing Demystified show. Today we have a commercial broker on our show, and I've never been a commercial broker, but I've been a residential real estate agent.
Same here. I've been a residential real estate agent as well, and I know many of them. A lot of my friends are residential brokers. It seems to be a common thing to do, particularly in Florida, where our focus market, and our good friend that's going to be presenting today is from that state as well. So a lot of people, everybody's like a real estate agent in Florida, but there is a significant difference between commercial real estate agents and residential real estate agents, and we're going to kind of demystify that.
That's absolutely right. And just full disclosure, when I was 22 years old and I took the real estate course, I actually had to get residential, commercial, and rural. So when I took the commercial section, it was difficult.
Oh, really?
Very difficult, yeah. And commercial is a very difficult space to be in. So I just love that we have Luke on our show today, and we're gonna really
absolutely. And I mean, just to touch on this a little bit more, is that like in residential, the process is a lot different. You know, you list it, you get a realtor, you list the house. You put it on MLS, buyers come in, they put an offer. The offer is with the purchase and sale agreement, and the highest offer gets the property. But in commercial, that's not the case. The relationship with brokers are tremendously important, and the highest offer doesn't always get the property, so brokers have such level of influence, and they're very sophisticated as well.
Mm-hmm.
I mean, a lot of these guys have MBAs and they're college graduates and what have you. It's not like a side gig, like no disrespect on residential brokers.
Yeah, we were both.
These guys are very sophisticated. And talking about sophistication, when we started CPI Capital, and we started kind of building our acquisition infrastructure, and we decided on Florida being our target and a focus market. We wanted to build those relationships with the brokers in the regions, and one of those cities was Jacksonville, a city that we're going to go into detail about in our conversation today. And we wanted to build relationships with the brokers, and this wasn't just superficial, getting on calls, calling them. This was going there, meeting them, breaking bread with them, connecting with them on a personal level. So
extremely important.
Yeah. So when deals do come through, we have them as our advocate there as well, and help us close on deals. And while we were in Jacksonville, myself and Paul Hopkins, our director of acquisitions, we've met Luke McCann multiple times in the past, but he did a presentation for us in their beautiful offices. Mm-hmm. And it really stuck with me because it was such a comprehensive presentation about Jacksonville, and I fell in love with the city even more. Mm-hmm. Jacksonville is the largest landmass city in the U.S. There are these belt roads that go around. You can get anywhere in the city, but we'll get Luke to touch on that a bit more. But is there anything else we need to cover?
I think I want to, I'll do a quick background about Luke, and then we can kind of dive in on how important that actual relationship is with the broker. Sure. We can break everything down, but a little bit about Luke, you guys. Luke is actually a real estate broker specializing in multifamily investment sales for NAI Hallmark in Jacksonville, Florida. An array of real estate experience with an emphasis on infill or high barrier to entry submarkets, selling land and value-add apartment communities. In a short period of time, McCann has established himself as one of the leading brokers in these submarkets, building a loyal client base who trusts his ability to identify and execute on high-quality assets. So thanks so much for being here on the show today, Luke.
Thank you, Luke.
We appreciate it.
It's an honor. Yeah, thanks for having me. Excited to do this.
Awesome. So let's dive in, Luke, and tell us what interested you about commercial real estate, and how did you get started in this space?
Yeah, before we get into kind of the relationship, the importance of brokers, tell us, how did you even get into commercial real estate?
Yeah, I was fortunate to be exposed to real estate in general at a young age. Read all the books that I'm sure you guys have, the Rich Dad, Poor Dads out there, and really believed in it first as a wealth vehicle. and knew that long term, no matter what I did for a career, that was something that I wanted to have my hands in, so to speak. So I actually got licensed like as soon as I could, a couple months after I turned 18. While I was in school, I just took a winter break and thought, I could spend the next few weeks off doing really whatever I want. Why not go do something productive? So picked up the license and started while I was in college again, just thinking, hey, where's the opportunity? I really don't know much about real estate. I'm not super well connected at that young of an age. I thought, hey, where's the kind of the low hanging fruit? And I've always been very analytical in that way, sifting through data, trying to find trends and whatnot. So I found my way into the infill land space, just connecting builders with vacant lots. Sold a few single family homes along the way, but quickly learned that that's not really wasn't something that interested me. Really found more enjoyment selling to builders and investors who were really bottom line oriented, as opposed to home buyers who could get caught up in the things like drapes and countertops and whatnot. There's certainly value in that, but didn't really necessarily align with my personality type. So along the way, found my way into multifamily really because I thought it was the easiest asset class to understand. I was living in an apartment building. I figured, why not go, start cold calling these things. So started again in the infill space, under 50 unit deals, 8 units here, 16 units there. So started to build that up. And as I got out of college, moved closer to home, continued that same process. Really nothing sexy, just, cold calling, letter writing, and doing what I could to kind of build up a book of business. But 16 units turned into 40 units, turned into 80 units, moved from the boutique firm that I was at out in Jacksonville Beach to where I'm at now at NAI. They previously had no multifamily presence here, but they tabbed me and my colleague, John Rutherford, to come over here with a support team and basically just handed us the reins and said, hey, you can leverage our brand, but otherwise call us when you need us. And we've really kind of built out something here that I think is pretty special. Our own company within a company, very much so, startup culture kind of energy. We're in early, we stay late. Very much just trying to constantly add value in every way that we can along the way to buyers and sellers alike. And really have complete control over it. I think it's unique in that way where we're at NAI, which is a global brand. So people generally recognize it, although it's predominantly an office and industrial leasing sales. That's largely the presence that NAI has, versus some of our competitors that may have more of a mainstay and known brand in the multifamily space. So we've had to come in and we always say we got to work twice as hard just to be half as good, relative to some of our competitors. But we like to think that all the value we're creating and passing along to our clients gets recognized in that way as well.
Amazing. Were you born and raised in Jacksonville?
Yeah, born and raised in Jacksonville Beach.
Okay, that definitely showed. Yeah, you're talking about kind of adding value to your clients. It's also the level of sophistication that you have about understanding about the city, path of progress, other items which really excited us. But before getting into that and kind of your crash course you're going to give us about Jacksonville and focus somewhat on multifamily and commercial real estate, let's talk about again the importance of brokers. And I think this is very important to emphasize because we've tried to do deals here for over the last couple of years, particularly over the last year and a bit since Paul Hopkins, our director of acquisition, has joined the team. And we're tracking deals as we get involved in deals. They come into our pipeline. We have a software, Asana, that we track the lifetime of the deal, or lifetime. I'm not sure which one, but yeah, we track them if we wrote an LOI, did the deal trade? Did we make it to the best and final? If it did trade, who bought it? What was it bought at? Some of these are not on the record, but we watch it through the whole thing. And at times we see that sometimes deals don't get traded. Sometimes there are retrades that are done by buyers. The highest price doesn't get it. Yeah. There's so many things that go there. But talk to us about your experience, Luke. And some of the data that Paul has collected is that over the last year in Florida, almost 50% of the deals that have come into the market and are either not awarded or fall through. They don't finally trade. Talk to us about.
And I was going to say, this is kind of why it's scary for sellers. And this is why we're going to talk about the relationship with you guys, because, it's this $20 million asset. The seller, worked really hard for years to put equity into the property. They have a decent property now, and then you put it for sale, you're trying to transact, and then you're trying to get the best price possible. But what we've seen over the last little bit here is, and what kind of August was mentioning, is that the brokers kind of advise the seller, hey, don't always go with the best price, because that's a group. They might not be able to close on the property. They might not be able to raise the capital.
Yeah.
And I think the biggest part for sellers is like, they pick a buyer, that buyer can't close. And then now there's a little stigma on that property.
It might create some stigma,
A little bit, maybe, or it's been held up for many, many, many months. Maybe it doesn't go through.
Their fund might be wrapping on. That's what happened with our current deal in Tampa, is that the deal fell through twice.
Yeah.
And then we were able to come in on kind of an off-market process. But talk to us about your experience, about this whole, just the acquisition process, about syndication groups that have to go out there, raise money from retail. Talk to us about that.
And then how much due diligence do you do on the buyer to make sure that you're supporting your seller and saying, hey, you know what, I'm confident that these guys have a track record, confident that they're going to be able to close, so that you're not put in a bad situation.
Yeah, for sure. I think it all stems from the fact that commercial real estate by nature is a very illiquid asset. The illiquid nature of commercial real estate, I think, it presents challenges, certainly, especially for sellers, but by nature that also creates opportunities for brokers and specialists like us to come in and kind of smooth out the kinks in that process, especially right now where there's a ton of market volatility. Making sure that the learning curve is shortened and you're sourcing buyers that actually can execute is as important as ever. And layered on top of that right now, especially with any move in the market cycle, the buyers that are coming into the market today are very different from who was coming into the market just a short time ago, which is natural with every market cycle. So I can give you maybe some insight into our process and how we qualify buyers in a competitive bid process, and maybe there's some tips and insights in there that the folks can uncover. So our process is very regimented, and we've adjusted it over time, but we found that it can yield some pretty good results. So it can take upwards of a month, sometimes longer, to pull a full listing together. That requires a lot of diligence upfront, which helps everybody throughout the process, especially buyers, because we've gone through dozens, if not hundreds, of marketing processes, and we know the questions that are bound to come up. So we want to have all those answers to the tests upfront. It makes it easier for everybody in the back end, and it can accelerate the study for buyers in that process as well. Once we have all that stuff together, we've got we've got the financials and supporting material, everything in the area that we need to know about a debt quote, an insurance quote upfront. Again, we just want to have all those answers upfront before launch.
You do it as if you're buying the property yourself. Same things we do. You literally.
Exactly. Yeah. Look, we're not just selling buildings. We're selling business plans. So when we take a deal out to market, we want to be able to articulate that to any buyer, because they're going to go have to set their own business plan as us. Especially, we know this area. I've learned the longer that I've been in this business that being born and raised in your own market is increasingly rare. I didn't think it would be that way, but it sounds more rare than not. So we want to share that insight to you all in that way. So yeah, like you said, we've got all that up front to make sure that when we do send a deal out, the buyers have all the answers that they need to plug it into their model. Make sure it passes the initial litmus test, and then throughout that process, it's typically a 3 to sometimes 4-week marketing process. We're actively touring the entire time, answering a ton of underwriting questions about the area, getting on buyer underwriting calls. We're feeding weekly updates to our seller clients in this process. Hey, here's who's toured this week. Here was the general feedback. Here may be some adjustments we need to make along the way. And then that all culminates in a call for offers, usually a specific date, again, 3 to 4 weeks after launch, where we bring the process to a close. We say, all right, everybody that has an interest, submit an LOI. And I think this might be a good opportunity to take time to mention now, I think more than ever, submitting LOIs, even if you're not at the guidance, can really help people, especially that are trying to break into new markets. Whereas 2 years ago, we may have had 30, 40 offers on a deal, and moved, 10 to 12 into a highest and best. Those offer sheets, as a result of where we're at in the marketing process, can be smaller now. And what may be a no today may later turn into a yes, or may serve as a data point for us as brokers to go back to on different deals. I can tell you we're very data driven. We keep track of everybody who executes CAs on our deals. We make note of everybody who submits an LOI on our deals, and we track all that data. And so when we bring out our next deal, or if we have an off-market opportunity, the first place that we're going to go to build that list out, other than just who's top of mind, is going to be, hey, who's offered on our deals recently, whether they've been competitive or not, because that shows us that the interest is sincere. They're up to tune with where the market is now. The learning curve for them on the next deal is likely going to be shortened because they've studied the rent comps, they've studied the sale comps. They know generally where the expense profile is going to land on the deal. And it can make for just a quicker process. So getting back to the actual marketing process for us, we'll get to the call for offers date. We'll put an offer matrix together to this and present it to the seller. Usually from there, if it's a competitive process where we've got at least a handful of offers that are within range of the guidance, we'll go back to everybody and set up essentially a cutoff for what we call a round of highest and best. That can be 2 groups, that can be 22 groups. It really just depends on the level of interest in the asset. It's that week that we spend working through the highest and best where we really get into the nitty-gritty with the buyer and do what you mentioned before with a lot of the qualifying. Because at the end of this process, when the seller comes to us and says, hey, who do you recommend we award the deal to, we want to have full confidence in that buyer that they're going to execute. Because there's a lot of reasons to not do a deal today. There's a lot of headwinds that buyers are facing. So we want to make sure that a lot of those road bumps that we as brokers have seen a million times that are bound to come up, we want to smooth those over the best we can. So that's things like, hey, what are you assuming on insurance? If they're assuming that they're going to get an insurance quote at $600 a unit, we know that those days are in the past and they're due for a surprise down the line, which is likely going to result in a retrade or the deal, falling apart entirely. So we'll go through with the buyer their full underwriting on their income assumptions, their expense assumptions, as well. We'll ask for kind of their track record, which, hey, send us your schedule of real estate owned. Maybe a couple of references in that process. Hey, have you ever retraded or dropped the deal before? If so, why? Retrading doesn't always necessarily mean you're a bad buyer, right? Sometimes you find things in the process that you weren't privy to up front. But again, that comes back to the seller and ultimately the brokers here to make sure that we're providing all the answers up front. But if we have put all the answers up front to the buyer, their underwriting checks out. They show that they're prepared. That's all we can ask for. We do send a questionnaire of sorts out in that process as well with all these same questions. Hey, what's your track record? What are you assuming on insurance, property taxes? What do you own in the area? Have you bid on anything in the area recently? And as much of it is as important as what you're putting in as answers, as much as, hey, what level of effort are they putting into this as well? It's happened before where buyers are like, yep, no, that's my offer. You can take it or leave it. And that's great and all. But if you're not willing to put the effort in to taking that next step and really proving to the seller, especially amongst all this volatility, that, hey, I really care about this deal and have a real sincere interest. Sometimes just the level of sincerity and thoroughness that's put into that process, just the questionnaire is one little aspect of it. Those are all things that are important. And we'll relay all this to the seller. Ultimately, every seller is different. Some sellers say, hey, send me everything. I want to read through every single LOI and every single questionnaire. Others just say, hey, do all your homework, and I just want to hear from you guys at the end of the process, who you think's, best for it. Obviously, pricing is paramount in a lot of these situations. But there has been deals that we've sold even here recently in the past year where we sold it to maybe the second or third highest bidder because, they demonstrated better capabilities than the top buyer, or they presented better terms, or, a cash buyer, right? And all these things go a long way now with a lot of the capital market volatility that we're facing. And they're necessary ingredients to getting a deal done. And that's, where we provide a lot of our value as brokers.
Amazing. Do you have any stories you can share with us without having to give any kind of names or group names or anything? Any stories you can share that you went through throughout the acquisition process that was interesting? Like a story that comes to my mind is that one of our partners had a property for sale. They never had any incidents at the property, and all of a sudden they go under contract. Right before they're about to sell the property, there was some gang situation that happens nearby, and then people are in an altercation. The guy gets shot somewhere outside of the property, but collapses on their property. So it brings this situation that was problematic, but then everything resolved and the deal traded. Any kind of interesting stories that you've either heard about or been part of where right at closing? I mean, we went through COVID as well, but right around closing, something happens. Maybe you can share some stories.
Definitely. Yeah, there's one, I think, kind of full circle to all the things that we're talking about now is roughly $30 million deal here in Jacksonville, Class C 1960s deal, heavy value add, I think is the kindest way to put it. There were 2 triple homicides on the deal in the 2 years preceding our marketing process. So we went into it knowing that, it was on the surface level, it was a good basis. So we knew that there was going to be a lot of interest, but we also knew that financing the deal and getting it insured was going to be a challenge for anybody, even the most, high net worth buyers. So we went through a competitive bid process. Sure enough, it was as competitive of a deal that we had in recent memory. And we actually went with, I think it was the third highest bidder because they were a cash buyer. They did not own in the area, but they came and toured. They, put all the necessary supporting documentation forward along with their LOI. I think the difference between their offer and the top offer was just under 7 figures. And that was another situation where the seller was like, look, I'm going to go with you guys' recommendation here. It'd be great to, make as much money as possible. But if you really think that we're going to have issues, getting this to the finish line with some typical agency finance buyers, and then I trust that. And we like to think we can smooth a lot of those things over in the process, whether it's the lender, which we always appreciate working with directly, or insurance and the like. But we knew that this one in particular just had a lot of hair on the deal. So we awarded it to that buyer as a cash buyer. They closed in 35 days. The day before closing, somebody drives into the property. I don't even think it was a resident. I think it was a prospective resident. Clubhouse is in the very back of the property. They drive to the very back, and I guess they had their gas pedal and their brake switched up, and they drove over the parking brake through the grass and knocked the fence over. It was like feet away from driving into the pool. And so there was a small insurance claim involved. It was like, as the attorneys were, not even the attorneys, the buyer and seller were sharpening their pencil to sign, and that comes on after finding a lot of things in due diligence that neither us, the buyer, or the seller really were aware of. But fortunately, the buyer was totally understanding of it. They owned similar old rougher deals with, maybe a rougher tenant base. And fortunately, they just took it in stride. But, there certainly have been instances that I've experienced and heard of where that can, throw a major wrench into the deal.
Yeah, absolutely. Good thing the buyer was like, it's all good. It's all good.
Yeah, that was a tough call for us to make, but they handled it well.
Yeah,
Okay, amazing.
exactly.
So I guess let's get into.
Yeah, I mean, I'm a little jealous, okay, because August went to see you in Jacksonville, and he's like, oh, I got this beautiful, amazing presentation. I learned all about Jacksonville, and Luke had this beautiful presentation. So maybe today on the call here, you can do, maybe we would love like a crash course on Jacksonville. And I want to know, why should people invest in Jacksonville?
For sure. I think I'll just kind of tell the story of Jacksonville, and maybe fast forward to where we're at in the current time. And I think, or I hope it'll, inspire a lot of folks to maybe consider it if they aren't already. So Jacksonville, historically has been like a sleepy little town in Northeast Florida. Some people you wouldn't even notice driving through. You figure, hey, maybe we're just in South Georgia. For the longest time, it was known as that one toll stop on I-95 on the way to Disney World in Orlando. We actually had a toll road on I-95 up until like I think the mid-90s. But coastal town right at the intersection of I-95 and I-10. So logistics and distribution is a major employment hub for us. Our port, it seems like it's deepened every few years, and increasingly is competitive with the likes of Miami, Charleston, Baltimore, Savannah. I think more and more shipping and logistics carriers are recognizing Jacksonville as a much more affordable alternative to a lot of the other coastal markets, because let's say if you're coming from South America through Panama, and you're coming to Miami or even Tampa, you've got to drive 300 miles up the state just to get to I-10, which is going to take you anywhere west of the eastern seaboard. So we've been able to take advantage of a lot of traffic in that way, and now are seeing some even Fortune 500 logistics and distribution companies find their way here. Military has also had a big presence in Jacksonville as well. We've got two major naval bases here that straddle each side of the city. So we've got Mayport, which lies right on the ocean, which is, primarily aircraft carriers, helicopters, and the like. And then we've got the air base, NAS Jax, which is on the west side of Jacksonville, 18,000 full-time jobs there as well. So you think about logistics and distribution, you think about military, education is a big component of our employment base here, with three university systems. And then healthcare. We've got 5 major hospital systems here, all of which are expanding. We've got a Mayo Clinic. I drive past it every day on my way to work, and they're always building something new over there. So for an MSA of this size, roughly 1.6, 1.7 million people, and we've got 5 major employment sectors, you typically would only see 2 or 3 for an MSA of that size. So we like to think that it's fairly recession resistant. And I think COVID was a good test case for that. So fast forward to the depths of COVID in 2020, Jacksonville's peak unemployment rate compared to all the other major metros in Florida, we peaked at a lower unemployment rate than any of the others, Orlando, Tampa, Miami, South Florida. And we also rebounded to our stable unemployment rate the quickest, which I think, again, is a testament to how recession resistant some of our employment sectors here. When we go into a recession, people still are working in military. People often go back to school in recessions. People always, have medical needs. So we think that our employment base here, which is growing into some more flashy areas like finance, I think the foundation of it is fairly stable. And while I don't necessarily think a recession is on the horizon, should that happen, I think we're in better shape than a lot of other places across the Southeast. August, you said at the beginning there, Jacksonville is the largest city by landmass in the country. So we've historically grown outwards and not upwards. So while the city of Jacksonville, which is Duval County, they're effectively one and the same. Our MSA stretches out into 4 adjacent counties, St. Johns County to the south, Nassau County to the north. And interestingly enough, every county adjacent to Duval County is a top 15 school district in the state of Florida. St. Johns County to the south is actually number 1. Duval County has always lag behind in like the 40 to 60 range in terms of school districts in the state of Florida. But that's where the employment is here. Fortunately, we've got really good infrastructure here. So while residents can kind of sprawl out over all of Northeast Florida, they all resort during the day to the employment hubs, largely in Duval County and in downtown and South Side and the like. And we can dive into some of those submarkets if you'd like as well. But I think there's kind of anybody can find it home. It's an affordable MSA, especially for its size. We've got 250 miles of waterfront here as well. So I like to say there's something for everybody.
Amazing.
And then there's that new stadium that's being built as well, right?
I think rebuilding the stadium. Talk to us about Shahid Khan. Well, you're
Yeah.
talk to us a
Really,
little.
yeah, we're really excited about that. Big fans of Shad Khan here in Jacksonville. You know, there's a lot of capital projects in the works right now, and rubber's starting to meet the road on a lot of them, including that one. You know, we've been here before in 2005, 6, and 7, where there were a lot of renderings and proposals put out there, a lot of press conferences in the run up to the GFC that unfortunately most of them never came to fruition. I had a similar feeling 2019, 2020, 21, where a lot of these proposals were being floated out there. But I think the difference now is we've got the entrepreneurship, we've got the big capital that's found their home into Jacksonville that may not necessarily be underwriting to a 3 to 5 year hold, because if you're underwriting to that, it's tough for these deals to pencil out because the rents right now may not justify it. But the data is crystallizing that we're in for a long runway here of growth in Jacksonville. And we've needed somebody that's willing to come plant their flag here and say, hey, I know this deal may not, be a cash king for the first 2 years, but if I can hold on to this on a 10, 15-year time horizon, then you're going to get a great foothold in our market here. So that's Shad Khan's a great example of that, where he came in, he bought the Jaguars, he's already tripled his investment in his short hold period of, I think, just over 10 years. Immediately when he came into Jacksonville, he reinvested into the stadium, a $250 million, I think, over his first few years. He led the efforts in getting a Four Seasons hotel here in Jacksonville, which is coming out of the ground right now as we speak, directly across the street from the stadium. And now the next step of that is what they're calling the Stadium of the Future, which we're expecting those negotiations with the city to become public here in the next 30 days. We're all very excited to see the renderings were pretty fancy looking. It's definitely going to be the biggest capital undertaking that Jacksonville's ever seen, but we're very passionate about our sports here and our Jaguars. And I think what's equally as important about it is it's not just a simple stadium upgrade. They're really taking advantage of the opportunity to completely revitalize the eastern side of downtown and the neighborhoods adjacent to it and make it a whole entertainment district, which if you followed some of the stadium redevelopments from some other NFL cities across the country, that's kind of the trend now. We're taking advantage of an expiring stadium lease and turn it into a whole new sports and residential entertainment district. So we're almost there. Well, there's a lot to be disclosed here soon. So we're keeping an eye out for it, and we're excited about it.
That does sound extremely exciting. Now, what quadrant is that in?
We would just call that.
Yeah, the reason Ava asked that because we know that Jacksonville is divided into 4 quadrants,
yeah.
and relative to where you are, that's kind of it takes on the more desirability of those quadrants.
We would call it downtown,
Okay.
kind of the urban core area. If you look at a map of Jacksonville, you've obviously got the Atlantic Ocean out to the right, but you've got the St. Johns River, which kind of just cuts right through the center of the county. And so our stadium here effectively is on the water. And so while Jacksonville is really sprawled, downtown is one of the areas that has some walkability to it. And that stadium project isn't the only major capital project that's in the works right now. On both sides of the river. To the south, you've got what they just call the South Bank, which is also part of our central business district, where they're moving a lot of dirt right now, multifamily mixed use development. So for a town that's very sprawled, I mean, I live in Jacksonville Beach now, and it's every bit of a 15-mile commute into the office, but it takes me 20 minutes, again, because we have such great infrastructure here. Our traffic that we call traffic here is likely very different from a lot of other big cities around the country. Yeah, we're excited to have some more walkability in our town here in Jacksonville, and big equity in the minds of Shad Khan that now have kind of put their money where their mouth is and are really backing these projects is sure to be a boon for others.
Absolutely, absolutely. No, we talked about all the positive stuff. CPI Capital, our team here is very bullish on Jacksonville, but let's talk about potentials of risk as well, right? So some of the things that we look for as multifamily investors are things like job growth. We know that Jacksonville has a very diverse job pool, population growth. We know that Jacksonville is a place that continuously has grown in population. People are moving there, living there, affordability, lot of recreation. So but the other concern in our business is this idea of hyper supply. So I'm going to make a comparison with, for example, Vancouver. Vancouver is a city that median home price is 1.7 million. Cap rates are around that 2%. If really they are there, might be even less than that. So real estate prices are through the roof. Now, one of those reasons is because Vancouver is landlocked. It's landlocked by the Pacific Ocean. It's landlocked by the U.S. border. It's landlocked by the mountains. It's landlocked by ALR, which is Agricultural Land Reserve, which you can't build anything there. There isn't a lot of land to build things. But when you compare that, and this is kind of my background, right? I was in the city for a long time as a developer and investor. But when you look at Jacksonville, largest landmass city in the U.S., it's got belt highways, a few of them that get you anywhere in the city. Doesn't then hyper supply or oversupply become a concern if you can pretty much build anywhere? Money comes in the city, developers can build. Let's say they're not in downtown or the most desirable area, they just move a bit out. Now they can go in and build a 300-400 unit project. Is that a concern when it comes to a city like Jacksonville?
And then for us multifamily investors, rent growth is one of those data that we have to follow. I mean, rent growth can change the whole entire returns for the investment and underwriting.
Hypersupply has direct connection to rent growth.
Yes. Yeah. So let's.
That's it. Yeah. So it's a good point. I mean, that supply has been a huge talking point with all of our clients over the past at least 18 months, maybe closer to 2 years. We take a lot of pride in sifting through the data. We found that there's a lot of misinformation out there with regards to the supply pipeline. Kind of like what I was mentioning earlier, when a developer sends a proposal out there or renderings that look nice and fancy, and hey, we're going to bring 300 units to this neighborhood, that's far from actually coming to fruition. There's a lot of steps along the way in development that can make it challenging even before you consider some of the macroeconomic headwinds. So we found that the pipeline, at least here in Jacksonville, can be severely overstated. We saw at one point CoStar said that there was 15,000 units under construction here. This was back earlier in quarter one. We actually updated just last month our development pipeline report, which I'm happy to share with you all or anybody who reaches out. And we went through project by project and delineated between what's actually under development, what's in lease up, what's just proposed. And the way we qualified what projects were actually coming to fruition, and mind you, it's a 3-year time horizon between breaking ground and getting a stabilized asset. We went through every project and said, okay, what has had a construction loan pulled? And if we didn't see that, we go in the public record and say, where has a notice of commencement been filed? And if neither of those have been issued, then that project likely isn't coming to fruition anytime soon or may have been abandoned entirely. So to your point, we have seen a run up in supply as rents have grown upwards of 40% here in Jacksonville since the onset of COVID. That's invited a lot of developer interest here in Jacksonville. Historically, it's been hard to get those deals to pencil here because, yeah, we've got the lowest Class A rents in the entire Southeast of any top 50 MSA in the country. And so while that makes the case for plenty of runway, it can be hard to get development deals to pencil. So fast forward to COVID, we get the big rent pop. A lot of developers flood into the market, and we went from developing 2,700 units in 2021 to this year, we're going to do about 8,300 units. We've absorbed it better than expected. Job and population growth here continue to trend roughly 30% above the pre-pandemic average in North Florida. Yes, we have seen rents essentially flatline and in some submarkets turn negative, largely as a result of that oversupply. But if you look into next year, and we show this on our report, the pipeline is going to go from 8,300 deliveries this year to just under 3,000 next year. And that's in large part due to, these development deals not penciling out. And again, that's a the life cycle of these development deals are longer. So we're looking at the horizon from 2025, 26, and 27, and we're expecting below average deliveries in that time. We're not expecting our population growth or job growth to fall off a cliff in the same way that the deliveries have. So we're expecting sometime likely in the latter half of 2025, once this current wave of supply has been absorbed, we're expecting rent growth to reaccelerate fairly quickly here. I don't think we're getting back to the days of 23% rent growth in 2021. But I think if you look closely at the data, you'd be reasonable to expect in a base case at least 3% rent growth, but very well likely could be a lot more. So we're at a snapshot in the cycle here that we've seen before in plenty of other markets where oversupply and in elevated levels of vacancy and rent growth flatlining. But when the data is coming in like it is now, we're expecting supply and demand to fall much back into favor, which bodes well for property owners like you all.
Amazing. Thanks for sharing all of that. Let's now, before getting to the second segment of our show, the next segment of our show, let's talk about some predictions.
Yes,
What is
please.
your prediction? I mean, you got your finger on the pulse of investors, of what's happening, of institutions. What is your prediction when it comes to interest rates? Is the Fed gonna? There's the 15. There's now the markets are saying a 15% chance they might actually increase rates.
I know, yeah.
But what is your prediction when it comes to interest rates? Is the Fed gonna reduce rates, stay flat? Is what's gonna happen?
Yeah, I like to look at the data. You guys had one of my favorites on, and Peter Linneman. I love his data, and I think there's a lot of truth in it as well. If you really peel back the layers of inflation, you see that it's just a few items that are driving it. Somehow, cost of living and shelter is still at elevated levels. We're looking at the data coming in now and seeing rent growth is negative in most submarkets and most markets across the country. How can that be? You look at inflation, headline inflation at least, hovering around 3%. We've got a federal funds rate in the mid fives. That just doesn't sound right. So I've maintained that the longer we go with this, the more likely it is that something breaks in the process. The longer we stay at elevated levels of federal funding. I don't know what that is. I go back to Jacksonville just being a very diverse and stable employment base, and I feel really comfortable that if we do enter a recession, which I don't think is likely, that we will fare better than others. But I think just as quickly as they can run up as they have here, the Treasury markets have in the past 60 days, they can fall. And the market has shown that they are very data dependent. So I anticipate that we'll end the year lower than we're at now. I don't think we're going back to where we were pre-pandemic. We're at elevated levels of government spending right now and a lot of onshoring, which is not conducive to an extremely low interest rate environment. But I can tell you that we will see a return to normal transaction levels and economic activity, even if things just stable out at levels where they are right now. I think as much as we don't like how high interest rates are, an equal, if not greater, driver of a lot of the activity or lack thereof has been all the volatility we've seen. It's hard to underwrite a deal when you're looking at treasury markets and thinking, man, I could put a deal under contract right now, but when I go to execute my loan application in 2, 3, 4 weeks from now, who knows where treasuries are going to be? And that's keeping a lot of investors on the sideline. It's keeping a lot of sellers from putting their deals out there as well, because we as brokers could provide a BOV, which is really driven by debt now more than ever in the current climate, as most investors are solving for a fixed rate debt solution agency if they can. And that is very interest rate and leverage sensitive. So again, I don't think we need to see the 10-year drop to 3.5 before we see transaction levels normalize. I think if it normalized where it's at now and we stop seeing the intraday 10 basis, 15 basis point swings, you could see a lot of investor confidence return to the market.
Okay, great.
Okay.
Go ahead.
10 championship rounds to financial freedom. Are you ready, Luke? Whatever comes top of mind, I'm going to ask a series of questions.
Let's do it. I'm ready for it.
Okay. Okay. Fantastic. First question is, who's been the most influential person in your life?
Definitely my dad. He's the person that exposed me to real estate at a young age. He never was in brokerage, but taught me a lot of how to work with people, how to negotiate. So yeah, my dad.
Nice.
Amazing. Next question. What is the number one book you'd recommend?
Probably the 1 Minute Millionaire. Everybody says Rich Dad Poor Dad, but I like the 1 Minute Millionaire because I'm not sure if you're familiar with it, but it's essentially 2 books in one, where like the left side pages tell one story, the right side pages tell another. They're telling a similar story, but one plays to more left brain folks and one plays to more right brain. So one is more fiction and the other is more nonfiction, but it's all about doing the best you can with what you've got, with an emphasis on financial freedom. So always enjoy that one.
Oh, nice. I've never heard of that book before. Well, we'll have to get that
Have a
one.
look.
Thanks for sharing that. All right, next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
You know, I've heard people get this question before, but I've never been asked it myself.
It's funny because you started your real estate career so young. You were 18, right? So
yeah, and look, being in a
really
sales
started his-
being in a sales position, you know, there's always doubt, right? So I tell myself what deals we're going to trade and just go focus on prospecting those, right? But no, I would just say stick with it, keep chopping wood, which is something I still tell myself, but never thought I would be where I am at this point. And yeah, I would just remind myself that you put your head down and you work and always have faith.
Amazing.
I love that. Awesome. Okay, next question. What's the best investment you've ever made?
You know, I want to say something that's not like a stock or probably my first pair of basketball shoes. Because I got those at a very young age. I'll never forget them. They were shiny and they were red. And that from a very young age started me on a path of always being healthy and fit, which I take a lot of pride in, and I think helps me in more areas than one.
Amazing. When you said that, I thought you were talking about like people invest in basketball shoes.
Yeah, right. Yeah.
That's true.
But no, you
true.
got it. Amazing.
Yeah.
Okay.
Beautiful.
Cool.
Health is everything. Yeah, I couldn't agree with you more. All right, next question. What's the worst investment you've ever made, and what lessons did you learn from it?
Definitely a stock that is no longer listed. And I took the advice from somebody who had some personal relationships with the C-level team, and he said he swore by it. And the lesson I learned is I didn't do any research on it. I just took their word for it and ended up losing some money. So the lesson there is always do your research.
Absolutely.
Yeah, absolutely. Okay, next question. Luke, how much would you need in the bank to retire today? What's your number?
And you've dealt with a lot of high net worth investors, types of people who buy real estate just for the cash flow, people who just want to move their money, 1031 exchange. So like you've been around with lots of money and people in those situations. So it's very interesting to know your answer.
Yeah, well, 2 things. One, I never plan on retiring, and 2, I'm very young, so I need to keep that in mind. But you know, we are in a much higher yield environment now, so maybe it's less than it was 2 years ago when you know you were earning 0% interest. So I would have to say probably seven figures, but maybe not much beyond $1 million, because I think now more than ever there's a ton of opportunities out there, even beyond real estate. And if you, again, do your homework, you can certainly find a way to sustain that. So I'll go $1 million.
All right,
Good
cool.
answer, nice. Okay, Luke, if you could have dinner with someone dead or alive, who would it be?
I'll tell you, I just read the biography of Alan Greenspan, which I was fascinated by. And now with all this economic volatility and all the headwinds we're facing now more than ever, I would say him. Honestly, maybe Peter Linneman. You guys had the fortunate opportunity to interview him. He would definitely be at that table if I had more than one seat, but I'll say Alan Greenspan.
I mean, so Greenspan, is he in private sector now, or was there any other big things he did other than the?
Other than, I mean, he had a fantastic story being raised, but he was the longest serving Fed chairman and saw through so many market cycles, and cycles repeat themselves right now. So I'm not sure what he's up to today, frankly, if he's even alive still. But I'm sure he's got as much insight on anybody economically, at least.
Amazing.
Nice. Okay, next question here. If you weren't doing what you're doing today, what would you be doing now?
I'm huge on sports. I love my Jacksonville Jaguars. I always said if I didn't make it in real estate, I would just try and work my way up through the NFL ranks and try and be in the front office somewhere.
Oh,
Nice.
awesome,
Okay,
awesome.
very cool.
Yeah.
Okay, book smarts or street smarts?
1,000,000% street smarts. I doubted many a times that I'd even make it through college.
Awesome.
And look at where you are today. I love that. Awesome. Last question, Luke. If you had $1 million in cash and you had to make one investment today, what would it be?
If I had $1 million in cash, I would probably go sponsor my own value add multifamily deal. Never sell it. Take as much of the pie as I could, because everybody's got their own investment appetite. I've seen a lot of our clients even still have had sales driven not necessarily by what they wanted to do, but they've got to cater to their investors. So I would go find something in the path of progress, whether it's in North Florida or somewhere else, park my money there and really sink my teeth into it, knowing that it's a forever investment.
Amazing.
Love
Legacy
it.
asset. Awesome.
Legacy
That's
asset.
it.
Thanks so much, man. No, I really appreciate your wisdom and
Really appreciate
always
everything.
enjoying conversation.
Yeah. What's the best way that people can reach you, Luke?
Yeah, I'm super active on LinkedIn, or trying to be at least. So find me there. Shoot me an email, lm@naihallmark.com, or if you're interested in Jacksonville, or at the very least looking to learn more, happy to send you our market research or hop on a call. So yeah, reach out directly to me via email or LinkedIn.
Amazing. Really
Awesome, Luke.
appreciate you, man. Thank you for being with us.
Thank you guys. Enjoyed it. Thanks.
Thank you.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.